Let's record to the. What is up, guys? What is up? What is up? Welcome to Ryan's 4 Pillars of Success. It is an honor and a pleasure to be with you guys this Sunday night. All right. If you are catching this on the recording, thank you for tuning in. And if you're here live with me, then even better. All right. So let's dive into it. And let's start right now. Okay. So follow your boy at Ryan Grinds on all social media. You already know. If you don't know my social media, then come on. What are you doing with your life? All right. So let's get to it. What are the four pillars of success? Dun, dun, dun. Okay. Oh, y'all like, yeah, you know how to use the images. Come on, y'all. You know, this is the face y'all probably looking at me with, right? Like, what are the 4 pillars of success, right? What is Ryan even talking about here? I'm about to really show you and break down to you the 4 central pillars that you need to master the markets with. All right. No one has ever done this because I created it. All right. All right. Just letting y'all know. Okay. So number 1, the Forex basics. Okay. What are the Forex basics? You have market structure. You have candlestick patterns. Then you have Forex pair correlations. Okay. Those are your basics. All right. So if we had to compare Forex like a school, this is your addition, your subtraction, your multiplication, and your division. And I know some of y'all school didn't do well at PEMDAS. Okay. Listen, I know some of y'all struggling out here with the, but it's okay. I'm trying to help you out. Okay. This is what I need you to do. I need you to understand market structure, candlestick patterns, Forex pair correlations. This is going to be the foundation. All right. You can't build anything unless you build this. Y'all with me? Y'all feel me? I'm just making sure y'all with me today. Look, y'all getting the good lit Rhyme today. I'm a good, fired up, jolly, upbeat, coffeeed up Ryan today. What's up? Okay. All right. Number 2, risk. Understanding risk management and proper risk to reward ratios. Understanding risk allocation when setting up a trade is number 2. Okay, if you need to write this down, you can write it down. I will post this in the Telegram as well. So if you're trying to write it down because you think I'm not going to give it to you later, then you're sadly mistaken. Of course I'm going to give it to you. All right, just relax and enjoy the show. Okay, but number 2 is risk. All right. Once you understand the basics, if you don't have the proper risk, then you have nothing. Okay. Understand that you have zero, nada, zilch, not a damn thing. All right. Number 3, psychology of traders. Okay. Notice I didn't say psychology of trading. There's a difference. Psychology of traders. Ooh, sounds fancy. I know. Okay. Mastering the psychological warfare of trading, understanding the different types of traders involved in the market and the roles that they play. What does that mean, Ryan? It means that if you want to play the game, you have to understand who's playing in the game in the first place, who created the rules. You know how they tell you if you want to break the rules, you have to understand and know the rules. It's very true, right? If you want to break the system, you have to understand the system first. If you're out here naive and just thinking that, you know, you're going to draw your little trend line, have your little support resistance line and make $1 million, you're sadly mistaken. Okay. It ain't going to work. You want me to tell you why it ain't going to work? I know it ain't working because you're on my webinar. So it's probably not working because you need a little bit more information than just that. If you had just that, trust me, we'd all be making millions of dollars and on a private island sipping pina coladas. But that's not the case. All right. So everything from YouTube ain't the best, just letting you know. All right. So you have to dive deeper into what the markets actually do and who are the big players and how you can take advantage of the big players in the market. Number 4, the hardest part of them all, right, is mastering you, mastering yourself, mastering your plan, but most importantly, mastering the D word, somebody put in the chat, your discipline, okay? The hardest part for, I would say, virtually all of us, okay, is mastering your discipline. It's not easy, right? It's not easy because why? It's all on you. You can break your discipline at any point in time. The only person holding you back is you. So let's now start to dive into each of these pillars, and we're gonna get on with the show, y'all, right? We got a lot of stuff to go over. All right. So the Forex basics, let's start with that. Back to the basics. We going back to school, all right? I need y'all to take a rewind back in time when you were on the cheese bus, all right? And you said, bye, mom, bye, dad. If you had mom and dad, hopefully you did. I did it, whatever. And you're like, bye, mom, bye, dad. You got your little Lunchables, your little Capri Sun, and you went on the little cheese bus and you went back to school. All right. It was September. You're like, oh, yeah, back to school, 2nd grade, 3rd grade, 5th grade, for those of y'all that went to school. All right. This is what I'm doing with y'all. We're going back on the cheese bus. All right. And we're going back to school, back to the basics. Right. So let's start here. Let's start here. Right. Price moves. Right. Let me read this real quick. Really nice for you guys. So when price moves within a structure of support and resistance, right, which essentially I'm showing you guys support and resistance and market structure. It's the first thing I'm going to dive into, right? I'm going to show you, obviously, the breakouts of the structure, the support resistance, right? All those beautiful movements, they're textbook movements in the market, and it's kind of like your addition and subtraction, okay? So what is market structure, right? Market structure is when you have 2 zones, right? In this case, we have 3, right? So we have this one here, 1, this zone 2, and then this one here. Look at these 3 lines there, all right? And as you can see, market is bouncing from zone to zone, right? Goes up, hits this area, comes down, hits this area, goes up, hits this other zone, comes back to support, hesitates, finally breaks support, right? Breaks support right there. So now, once it breaks support, it starts to come in the middle of the next zone, hits the next zone here, finally, comes back up, and now support becomes what, y'all? I need you to put it in the chat. Support now becomes what? What does that now become? Resistance. Yay. You get a cookie. Who gets a cookie? You get a cookie. You said resistance, okay? So now, the same area where price was rejecting here, right, will also now reject it here, but on the opposite end, in the opposite direction. Y'all feel me? Y'all following me so far? Right? So now when it continues to hit this area, go to the next level, it bounces off that zone, goes up to resistance again, comes back down to this zone. Simple explanation. Y'all feel me? So this is just textbook and traditional support resistance, right? Where you have the market coming into the zone, right? Let me remove all the drawings, okay? But when you have the market come from here, bounce off a support level, break the level right here, all right? Breaks that level. Oops. Hey, don't be mean to me, Mr. PowerPoint. Okay, it breaks that level and then comes into the middle, so and then drops to the next zone. This is the next zone, right? The next support is level, pierces up again to now resistance, and now switches from support, right, to resistance, right? Everyone understands that, right? Not too hard, right? Very basic concept, okay? But it is something that you need to master, all right? I didn't say you need to know. I didn't say you need to, okay, kind of figure out. I said master. You need to master this concept. If you have not yet mastered this concept, then I need you to go back on your charts and start back testing and having more chart time in your life, young man. Okay? That's what I need you to do, or young woman, if you're a lady. Okay? Like, this is probably the best thing that's going to take your trading from 0 to 100 if you have not mastered this already. Now, granted, a whole lot of y'all have this is y'all past this. If you're an intermediate to advanced trader, this is like, you know, you're yawning about now. Okay, bro, just relax. I got something for you too. But for all my new people, you need to realize that you need this. Okay? You need this in your life. Okay? Just letting you know. All right? It's like a good healthy diet. Without this, you don't have anything. Right? You're not going to be healthy. You're not going to be healthy in your trading. You're not going to be healthy in your bank account if you don't have this. All right? This is like your fruits and veggies. Some of y'all don't like your fruits and veggies. Well, you got to eat it anyway. Okay? All right. So if we go and a little deeper, okay, just a little deeper, then you guys can see in a more crystal clear example with price action and candlesticks what it kind of looks like, right? So it's the same thing, the same format, right? Where we have support, right? It breaks structure here, breaks resistance, comes up here, comes back down. This is now support here, comes back to this area, taps the resistance, retraces a little bit, pulls back into the zone, into this resistance again, taps it again. This is now support, and then continues to go in a bullish trend. All right. So you have your main zones, which are indicated by the red and green levels here. Those are like your zones. And you understand how price respects those levels and holds those levels. Okay, again, this is really the basis of market structure and price action and support resistance, probably all put it together in one little picture. Okay, so a breakout of the structural support or resistance will lead to price movement in the next area of the support resistance. Does that make sense for y'all? Right? So meaning it's just zone to zone. Okay. That's why I call myself a zone to zone trader. If you can draw your zones accurately, then all you have to do is realize the break or retest of those zones will give you entries until the next area. That's it. That's why I call myself a zone to zone trader, because once you draw your zones properly, once price breaks one zone, it's going to go to the next zone. The way I like to put it is the market likes to go to the path of least resistance. Some of you guys know my picture when I kind of make like a little river, right? You can think of the market as a river, right? And what you want to do is go with the river, right? With the flow, right? You don't want to go against the flow of a river or lake or ocean, the current, right? You don't want to go against it. You want to go with it. Do you want to go upstream against it, or would you rather go downstream with the current so you go even faster? Think of the market like that. Wherever it's going, wherever the momentum is, that's the direction that you want to go. You want to ride the wave. All right. You can almost think of it like surfing. That's probably a better analogy. It's like, so you want to ride the wave. You don't want to go against it. You want to go with it. And that's what you're doing once you understand the market is breaking zones and has a tendency to go to the next area or the next zone. That's what you want to do. Y'all feel me? Okay. All right. So candlestick confirmation, one of my favorite things. I haven't really dived into this, you know. So now we're kind of getting a little intermediate, you know, little shaky. Okay. So let's dive into candlestick confirmations. There are hundreds of candlestick patterns you can memorize. Trust me, if you type in candlestick patterns on Forex, you're probably going to get a million. And do you need to memorize all of them? Do you need to memorize the Dratini dragon Pokemon pattern? Do you need to memorize the butterfly dolphin harmonic bat pattern? No. All right. Do you need to do you need to memorize the retrograde half moon half bat half unicorn light skin pattern? No, you don't. I mean, that'd probably be my pattern, but I mean, I'm just letting y'all know you don't need to recognize or memorize all that stuff. Okay, who cares? Just memorize the ones I'm telling you. Yeah, that's right. I said it. Memorize the ones I'm telling you. I don't care what anyone else taught you. I'm joking, but I'm gonna give you some of mine. All right, so here we go. Here's one of my main patterns I like. This isn't a breakthrough here. All right, this isn't like, oh my God, Ryan, you're teaching something so new. Oh, amazing. Oh, no, this is pretty basic. Okay, relax. Hold your horses. It's just a standard bullish engulfing pattern. All right, standard. But you have to understand and be able to pinpoint this in the market, y'all. Okay, if you can't pinpoint a bullish engulfing pattern, whether it's bearish or bullish, then we have a problem. All right. Now, a bullish or bearish engulfing pattern, which I've indicated for you beautifully by this picture that I've stolen. Oh, did I steal it? Did I mention that? Okay, no, I didn't steal it. I mean, of course I made this from scratch. I would never steal. Anyway, yeah, so this bullish candle here, all right, again, when it comes to a critical level here, and you get a bullish engulfing, depending on the time frame, depending what you're looking at, could signify a great confluence as to buy, right? As to buy. And inversely, when this is a zone, right? And this, let's just say that's a zone, and then you have your bearish engulfing pattern, this could signify more confluence for a sell. You know, there you go. Y'all getting it, you know, a sell. All right. So again, this is basic candlestick patterns that your boy Ryan likes. This isn't, I'm not teaching y'all something that someone else likes. I'm teaching y'all what I like. All right. My preferences, you know, hey, you're going to like them, you're going to hate them, but you're going to understand them. Okay. All right. So let's go to the next one. I call it the bullish railroad pattern, right? Some people call it the equal engulfing pattern, yada, yada, same stuff, okay? Some of you guys know as railroad pattern, right? It's one of my favorite patterns, all right? And all that is when you really take two candlestick patterns, all right? And they're the same exact length for the most part, right? But the secondary candle is probably maybe slightly bigger than the first one, but it can be even equal. Usually they're equal. And the great part is when they have these wicks right here. So when they have these little wicks at the bottom down here, like this little wicky right here, right? And these wicks right here, that's a beautiful thing, okay? So between those two candles, when they're equal, right? And better yet, when you have a secondary candlestick pattern, which is the first candle before that, and then this, and then I would say the fourth candle after the first three candles, right? So the first and fourth candle, so the first one is bearish, and the fourth one is bullish. The two ones in between, which is right here, are an equal engulfing. You have a very nice reversal pattern in the market. It's one of my favorite patterns, right? So if you need to take some notes on that, go ahead. All right. I got all night. I'm here all night for you. All right. So that's another one of my favorite patterns. I guarantee you, I'm gonna show y'all a pattern that you've never seen before. I guarantee you. Stop playing with me. Y'all, some of y'all like, oh man, this is, what do you mean? I already know these patterns, Ryan. I learned this from this other guy in this other company, and I don't want to hear none of that. All right, relax. Take your time. I got all night. Okay, I'm trying to ease you into this thing. You understand? It's like I don't see. I don't want to start talking the way I want to talk. But anyway, just know I'm trying to ease y'all into it. All right, just relax, relax. All right, all right. So I also have here the wick fake out engulfing pattern. Ooh, Ryan, what's that? Should I even tell you? Do you guys even deserve to know my little secret pattern? So this is something that I like that, I can't even really I won't say explain, but you can't look it up because I created it. So I don't know. All right. And I know it kind of looks crazy. You're like, whoa, what is this? I don't understand it. I'll break it down. Okay. So what we have here is when you have some type of like maybe double top or a double bottom. It could be a head and shoulders or an inverse head and shoulders. And what happens here is when you have these wicks, right? Like you see these two wicks, guys, right here. You extend a zone out on those wicks. And what happens is you'll have price shoot up into this area, right? Reject that area and then give you some type of candlestick confirmation. Now, what candlestick confirmation is this one right here that I just told y'all about? Someone tell me in the chat, please, before I pop a blood vessel. Somebody. Thank you, Juanisha. Yeah, Juan. What's up, Juan? I see you, sis. Yeah, Sherry. Yeah, Joey. What's up, bro? I see y'all. Okay, Forex Mama. Okay. All right, exactly. It's a bearish engulfing, right? So let me. Okay, hold on. I'm gonna get ahead of myself. Okay, let's just do it the easy way. Let's go to the charts. Okay. Now, this is what I'm trying to show you guys, right? Is when you think you see like a double top here, right? Like bada bing, bada boom. Standard double top. Now, what is a double top? A double top is just, think of it like a double mountain, just like this, a nice M. You could think of it like an M. You could think of it like two little mountain tops, right? And, it just goes like boop, 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 just like that. That's what a double top is, okay? There's many terms for a double top, M formation, all types of stuff. Who cares? Now, once we have that, I'm taking these wicks here, these wicks right here, okay? I'm extending that zone out, which I'm showcasing with the green box here. And as you see, what candlestick pattern do I have right here? Right? The same thing as my example. Okay, so when you have basically the wick rejection, and then you have it pulling into the wick rejection, and it gives you a really good candlestick reversal pattern, you really have a good reversal overall on that trend usually. If you can get it on like the 15-minute chart, 30-minute, 1 hour, usually on the intraday or higher time frames, it solidifies that move. Okay, so that's why I call it like the wick fake out engulfing candlestick pattern. It pulls into the wicks. So again, these are the wicks right here. These wicks, it pulls into these wicks, and then the second M or the second leg of that M, all right, or it could be, again, inverse head and shoulders, it pulls into that zone, into that area, gives you a candlestick reversal, right? But it doesn't also break the top of the wicks. It pulls into it, reverses, you have a good reversal. Okay? All right. Y'all got me? Is that, y'all understand? Comprende? All right, cool. So another candlestick pattern that I really like, okay? Morning star and the evening star pattern. So they're pretty good, right? I like them, right? Again, they're a 3 candlestick pattern, okay? Signified by the bearish candle here, the doji here, and then the bullish candle here. And then when it's reversed, you have the bullish candle here, the doji here, and then the bearish candle there. Okay, so all it is bullish doji, bearish, bearish doji, bullish. Simple. Okay. Another basic candlestick pattern that's been tried and true, okay, for eons, and it works. Again, I'm just telling you the ones that I like, the ones that I kind of created and see for myself, and the ones that you'll see me trade my price action based off of. It's really these types of patterns. I'm serious. I don't know 10, 15 patterns. I probably know a good 3 to 5. That's it. And I stick to those. I don't memorize all the 50 candlestick patterns that you're supposed to memorize. I don't got time for that. Anyway. Right. The Morningstar pattern. So just to elaborate a little bit more on the Morningstar pattern. All right. I like personally to see that the second candle is higher than the first candle. So what I mean by that, if this is the first candle, right, we'll put a number 1 here, right? You see the height of this candle, which is the confirmation. Okay, the height of this candle here. Then we're going to put number 2 on the bullish candle, which is the green candle. You see how the height of this candle is higher than this one? That to me is indicating bullish momentum. So when you have a Morningstar pattern, what I like to see, because there are lots of variations of it, is that it must be higher than the previous candle. Okay, so basically my 2 has to always be higher than my 1. Does that make sense? My second candle, so after the doji, so there'll be a bearish candle, which is the red, number 1, then the doji, and then the 2. So my 2 candle will always be higher than my 1, or in the reverse, if we were going down, it would just be my second candle, which would be a bearish red candle, would always be lower than the first candle because we'd be going in the opposite direction. Okay, so I don't really like it if the candle closed somewhere right here. So let's say if the candle closed right here, right, this green candle closed, I don't like it. I want it to close all the way up here somewhere. I want it to close higher than the previous high. Again, that's just the way I like to trade my Morningstar patterns. All right, I'm just giving y'all what I like. All right, does that make sense? Y'all with me? Okay. All right, cool. So bullish engulfing plus confirmation pattern. Ooh, what's that? Sexy, I know. So this is another, I would say, kind of pattern I kind of created. You know, this is just something that I like to see, which is why I had to make my own little picture. Okay, just so you guys know. So what do we have here? Well, first of all, let me change the color because I want to use black. So what we have here, all right, and this is what I want you to focus on. The last 2 candles before it broke out, this 2 candles right here is a candlestick pattern, okay? This is a candlestick pattern right here, right? A lot of you guys are brilliant enough to know the candlestick patterns because y'all are smart as hell, right? Everyone on here is smart as hell, right? I'm just going to speak that into existence because I don't have dummies on my chat or my webinars, right? So this is a bullish engulfing, okay? Now, the candle afterwards, which is this candle right here, okay? This is what I want you guys to really understand. Now, someone is going to have an aha moment right now, and someone's going to be like, I don't know what this is. So let me break this down to you very slow. Okay, very slow. All right. Once you have an engulfing pattern, the third candle, okay, because this is the first candle, this is the second candle. It's a 3 candle pattern. Okay. 1, 2, 3. Okay. So on the second candle, bullish engulfing. On the third candle, bullish engulfing confirmed. Why is it bullish engulfing confirmed? Okay, so now if you take, let's switch it. Let's make it pink. You know, I'm feeling pinky right now. All right. So if we extend this level out right here, okay, the top of this bearish candle, right, you will see here that the third candle, candle number 3, pulled back into the top of that previous candle and closed what? Closed bullish, right? And not only closed bullish, but closed more bullish than the height of the second candle. Okay, do y'all follow me? Someone got lost, but it's okay. I'll explain one more time. You have the bullish engulfing candle, which is candle 1 and number 2. Candle number 3 is what we're paying attention to, because what happens here, this wick right here, all right, it pulled into the top of candle number 1 and closed bullish higher than candle number 2. All right, so I call that the bullish engulfing plus confirmation candle, hence the name. All right, bullish engulfing plus confirmation pattern. All right, because you have your bullish engulfing plus confirmation. So sometimes it's worth waiting for your bullish engulfing, right? And then to wait for that third candle to crystallize and manifest so you can see if it's confirmed or not. And then usually when it's confirmed, you have your entry, boom, after here. You start buying here, you start buying here, so you can buy after because you have confirmation on the bullishness that's going to happen. Now it depends on your time frame. It could just be for 5 minutes, it could just be for 1 hour, it can be for the whole day. But whatever time frame you're looking at, and I would advise you at least do the 15-minute or above, all right? Just because price action holds better on the higher time frames, as you guys should know, all right? So that is why I call it the bullish engulfing confirmation pattern. Y'all with me? Make sense? Okay, cool. All right. So this is just the reverse, the bearish engulfing confirmation pattern. Okay. Y'all feel me? Y'all like this? Same thing. Same thing, same thing, same thing. All right. Now, this is a slightly different variation though. We don't have a bearish engulfing. What we have here is a doji, a huge bearish candle, right? So it's kind of like, whoa, a huge candle that's engulfing. But what happens here is the top of the confirmation candle, right, is still relatively into the structure level of the previous candles, right, which is kind of the tops of that level. It breaks that and then goes down, and then it closes down here. Okay, so again, it's just about finding candlestick patterns, and then the candle afterwards, usually if you get a wick and then continuation out of that candle, which is like this right here, you have a wick and then continuation of that trend, that's going to be a confirmation candle, which means you can get in and start scaling in on that trade. Okay, so that's another candlestick confirmation. All right. Let me see. Fire, y'all saying y'all fire. It's fire already. Christine said the right way. You already know what it's. Man, you already know. I told you I was coming with the heat. All right. Anyway, so number 2, what is risk? Let's talk about the risk. Risky frisky. Y'all know I love to be risky frisky. I can't even deny it. Oh, I can't deny it. All right, let me stop. Let me stop. I don't want to start singing, okay? Not on the recording anyway. All right, so risky, frisky. All right, let's go. So what does risk mean in trading? Risk in trading or investing is the probability of losing part or all of your initial investments. On the other side is the potential reward, the profit you could make. In general, We say that the greater the risk, the greater the potential reward or return on investment. All right, y'all. All right. So seriously though, it's everything's about risk, y'all. Okay. Risk is essentially what you're putting up, what you're willing to lose. And if you don't know what you're willing to lose, then you're probably willing to lose it all. You're probably willing to risk it all. Okay. You're trying to risk it for the biscuit out here if you don't know what you're risking. All right. So if you don't know your proper lot size, if you don't know your psychological stop loss, if you don't know all these things before you hit the buy or sell button, then you're probably risking too much or too little. Okay. So understanding and mastering your risk allocation is key. Okay. So manage your trades properly. Manage your trade properly. Have a proper risk to reward ratio. 1-to-1, 1-to-2, 1-to-3, 1-to-3. This is basic stuff, y'all. All right. I tell you guys, always have a good risk to reward. All right. This is something that I didn't learn for my first few years of trading. I was trading. I was like, sometimes it'd be a 1-to-2, sometimes it'd be a 1-to-3, sometimes I'd be risking 30 pips to make 10. I didn't really have a consistency as far as my risk reward ratios. Okay. But as a consistent and profitable trader, you have to have a foundation as to which risk to reward ratio you're going to stand by. And so for me, I usually have a 1-to-2 for the majority of my trades, right? Like that's kind of like my base as far as risk reward. Sometimes is it 1-to-1? Yeah, maybe, but it's usually 1-to-2 or 1-to-3. Sometimes I'll get 1-to-4, 1-to-5. That's cute too. But I usually stay in the 1-to-2, 1-to-3 lane. And that's just me. I know my trades, I know my pairs. Again, everyone's going to be different. So always have a stop loss. Okay. If you do not know your risk when you're trading, then you do not understand trading at all. And I just said that. Okay. 2-to 3% per trade is a good baseline to follow for newbies. Again, if you're new, sometimes if you're not new, then you kind of got to be new all over again and do what I'm telling you to do. Go back to trading 2-to 3% per trade. Okay. You hear me? You don't hear me? Okay, let me say it again. 2-to 3% per trade is a good baseline to follow for newbies. Okay? Some of y'all need to hear that and maybe reread that 50 times. Anyway, taking partial profits will save your life if you are the greedy type. The greedy type. I'm saying that for myself, y'all, because I know I'm greedy. Trust me, I've gotten a whole lot better over the years, and I'm not as greedy. Some of my students in here laughing because I've had 5-figure days, and I'm still greedy. I'm talking, I've been up 20, 30, 40K. I'm like, I want more, give me more. And then like, yeah, anyway, it's part of the game. Okay. The greed factor is big. I always take partials at my first TP now. It's something that I've kind of added to my arsenal, and I've realized that that's the best way for me because sometimes I'm just a greedy ass. And I just admit that openly because, who the hell's going to stop me from me being me? Nobody. I can be real with y'all, right? So you think you guys aren't the only one? No. We all go through it. We're all greedy as hell. But you have to tame your greed. You have to understand, okay, what's going to make me not be greedy anymore? What's going to make me not be enticed by the greediness of the market? Because there's two things that rule the market: greed and fear. Only two things: greed and fear rule the market. So how you react to them is what's going to dictate your success in this game. Do y'all hear me? Okay. So realize and learn your tendencies so that you can maximize your gains in the market. Again, one of my things is that I'm greedy. So what I do now is when I have a TP1, which is usually 10 to 20 pips or so, I take partials, even if it's 20% off, 50% off, 60% off. I'm taking something out the market so that I don't get enticed to say, oh, I want to hit 50 pips, 60 pips, 40 pips. And then the market goes against me. So you have to know you. Again, this is all about risk. I can't teach you about yourself. You know yourself. Some of y'all are way riskier than me. Some of y'all are extremely way more conservative than me. So you have to understand yourself. All right. Risk management is the most important part of your trade strategy. I mean, some of you who've been in the game, whether you're intermediate or advanced, you know that you can have the best freaking strategy, but without proper risk management, it don't mean shit. Okay. It doesn't mean shit. I'm saying that to emphasize the S word because I need y'all to understand. It doesn't mean shit. Okay. All right. Was that enough S words? Okay, cool. The key to consistent success as a trader is to keep your losses smaller than your profits. So a lot of you have seen this chart before. I'm not going to harp on it like crazy, but for all my new people, all right, this is what I want you to realize, all right, is that when you have a risk to reward, this is what PR means. Payoff ratio means risk to reward ratio. Okay, when you have let's start with a 1-to-1 risk reward here. Okay, when you have a 55% win rate, you are profitable. Okay, everything in the green means you're profitable. Everything in the red means that your account go bye-bye. Okay, your account go bye-bye. You cry at night, and you curl up in a ball in the fetus position. All right, and then you have to redeposit and then do it all over again every week. So sucks to be you. I'm joking. Anyway, so when you go to the risk reward 2-to-1, all right, your win ratio has to be 40%. That sounds good to me. So think about it. All right. If you have a risk reward of 2-to-1, so let's say you're risking $10 to make $20 every trade. You only have to be 40% accurate to maintain profitability on your account. Does that make sense? You're risking $10 to make 20, but every trade has to be centered around that risk. Okay, so if you can set up your trades where you're risking $10 to make 20 or risking $100 to make 200, all you have to do is win at least 40% and you will maintain profitability on your account. Y'all feel me? Okay. Now, if you take the same exact scenario, but instead of a 2-to-1, you make it 3-to-1. All right. So you're risking $10 to make $30, or you're risking $100 to make $300. All you have to do is maintain a win ratio of 30%. Okay. To maintain profitability. Does that make sense, y'all? Okay. Does that make sense? So as you see here, risk to reward is very, very important. You have to know the numbers, right? So I know if I'm at least 40 to 40% or higher on a 2-to-1, I'm going to win long term. So you have to ask yourself, I need you to put some yeses in the chat, right? If you can find 2-to-1s consistently, right? Do you think you can be more than 50% accurate, more than 40% accurate? Really ask yourself, if you can find 2-to-1 risk rewards in the market, or even 3-to-1, you're risking 10 pips to make 30, you're risking 20 pips to make 40, you're risking 30 pips to make 60. Do you think you can at least be 40% accurate? If you can confidently say yes in the market, there's no reason why you can't make 6 figures here. There's no reason why you can't make 7 figures here. There's no reason why you can't make 8 figures here. The only thing that's stopping you is you. I promise you. I promise you. Okay? It's just those small, intangible things of the market, like your greed, like your risk, like your trading plan, all these other little aspects maybe you being stressed out at home because of your significant other or family and bills. And I'm telling you, all these other things are taken away from what you could be doing. And you just have to focus. Okay. You just need to realign yourself and focus up. Okay. So let's go to number 3 because we're already like an hour in. Number 3, psychology of traders. Okay. It's a trade war, baby. You got to understand, you're not here out by yourself. Trading is a lonely game. You're in it for yourself. But let me tell you, you're not by yourself and you're not the only one trying to be in it for themselves. Okay. So, in order to understand, you have to understand the game, right? Before you can even understand what to really do in the market, you got to know the players. How are you going to play the game and you don't even know the rules? Come on. What are you doing? You think you're going to win the game and don't know the rules? Come on now. I'm going to beat you every time. You don't know the rules. All right. So there are 2 major players in the game. Number 1, the retail traders. Number 2, institutional traders, the banks, the hedge funds. All right. That's it. It's really that simple. It's really that simple. There's the 99%, which is the retail traders, okay, that think they know how to trade the market. All right. And then there's the institutional traders who really know how to trade the market and actually move the market and are trying to take all the money from number 1. Okay. So you have to understand the difference. You have to understand how each player looks at the market and how to take advantage. All right. So which side would you rather be on is the question. Okay. And based on how you trade will determine the side you're on by default. It don't matter what you think you're on. It don't matter what someone taught you. Being real with you, some of y'all are studying institutional trading and institutional traders, and it's cute and all. Don't get me wrong, but if you still trading dumb stuff, it don't matter. It doesn't matter. Your order block don't mean shit to me, bro. You understand? You want to know why? Because you're still doing the dumb stuff that most retail traders do. So who cares if you understand what an order block is? It looks like a zone to me. All right. It like y'all try to over complicate this. Okay. Yes, you need to understand the institutional side of trading. Yes, you need to understand the institutional psychology, the stop hunts, the manipulation. All right. But if you're still doing the retail stuff that most people are doing anyway, even though you have the knowledge, does it even matter? Think about that. Does it even matter? So, knowledge, I forgot how they call it, but it's like knowledge not even applied is not even knowledge at all, basically. Right? Like if you can't apply the knowledge that you are getting and finding out, then it doesn't even matter. Okay. So you not only need to understand the psychological and institutional side of trading, but you need to know how to apply it accurately in your trading, right? So you can then transition from being a retail trader to a more institutional trader. Okay. So it's not only enough to learn it or to learn concepts, but you must apply it, and not just apply it, but use the strategies that they use along with it, because it's not just about the strategy. All right. Institutional traders just trade differently. Okay. They trade differently. The risk management is different. The way their entry system is different. The way they scale in and scale out of trades is different. Everything is different. So you can't just even take their bare bones strategy and apply it and think that you're going to be wildly successful. You have to have the complete, let's say, playbook that they use. All right. So I want to let you guys know because, there's a difference between learning the institutional stuff and then applying it. Right. And I know all you guys are learning it and it's fun. And, I teach that as well, too. But at the end of the day, I'll promise you this. You don't have to learn anything about institutional trading. OK, and you can, if you master yourself and just master the charts, I'm talking like you study a few of your own pairs, you study that every day in and out, and you take that way more serious than the institutional concepts, you'll become wildly more successful. If you master yourself, your risk management, you'll become wildly more successful. So, it's like some of those people who try to know the advanced stuff. They sit there and they're like, knowledge on ice isn't better than ignorance on fire. That's essentially what I'm saying here, right? Don't try to overcomplicate what the institutional stuff is going to do. All right. Like, I'm not going to go into it too much here, but just know that there are two sides to the game. There's the retail side, there's the institutional side. You have to know both. Okay. You can't only know the retail stuff and think you're going to win. And you can't only know the institutional stuff and think you're going to win, because they're both two sides to the same coin. Does that make sense? They're two sides to the same coin, and you have to know both sides of the game, both sides of the coin. So you, as a trader who's actually, I would say, in the middle, because now you're not really a retail trader, and now you're not only an institutional trader. Once you understand both, you're someone in the middle, and now you can understand the game and break the rules. Make sense? I know that was a little long-winded, but it came full circle at the end. You know what I'm saying? Okay, all right, let's make it short. Y'all rocking with me? Does that make sense though? Right? That makes sense? Okay. Tanny said, please. I don't know if I have time, Tanny, but I got you. So the fourth aspect, number 4, numero cuatro. The last aspect of this is mastering you. Okay? We're almost done, y'all. We're almost done. And then we're going to do Q&A. So this is one of my favorite quotes by Lao Tzu. Some of y'all may know it. Mastering others is strength, but mastering yourself is true power. Mastering yourself is probably the hardest thing to do. Not just in trading, but in life. And trading is no different, to be honest. Okay. So what is the first thing you need to do when it comes to trading? I need to know. Drop it in the chat right now. What is the first thing you need to do when it comes to trading, y'all? So before you even look at a chart, I'll give you guys a hint. Before you even look at a chart, right? For me, anyway, what's the first thing you gotta do? Let me see what y'all saying. No, not before you even check the news. DJ said plan, time, self-mastery, news, plan. Okay. Tainted study, all great answers. Sakwi said stay calm, hydrate. That's true. I like it. Sakwi. Miss Priest, a trading plan. Okay, I like it. Mel's trading plan. Okay. Katie said clear your mind. Okay. Natasha psychology. Okay. Joanne said check your emotions. That's true. I'm rocking with y'all. Tank said back test. These are all valid. You're all winning. Chris, cup of water. I'm with you, bro. Eat breakfast. That's true. It's way better to eat. All right, but on a serious note, it's revolved around trading though. The first thing you want to do, right? And this is, again, it's really revolved around that mastering yourself and risk everything is creating your trade plan. So whoever said that, come to the front of the room, get your cookie. I got oatmeal, I got mac. So quick story, before I got to class today, I did a stop at Rite Aid. I made sure to get all the cookies because I know it's gonna be a lot of people here. I got macadamia, I got chocolate chip, I got peanut butter. Okay. I got a birthday cake. All right. I got sprinkles. Whatever type of cookie you want, I got you today, y'all. So come to the class. All right. After we're done, all right, you can come to the front and get your cookie. All right. Whoever said trade plan. If you didn't say trade plan, then I'm sorry. You just stay in the back of the class. All right. So this is the site that I use when I try to develop a trade plan. All right. A lot of you guys know it. Some of you, they should endorse me. I should be making some type of affiliate commission, but I don't get endorsed by this site. But I should probably. So compounddaily.org/calculator. Okay. It's where I create my trade plan. All right. So can you guys see the compound daily interest calculator now when I clicked it? Just making sure you guys can see it. Put some ones in the chat if you can see it. The white screen with the gray background. The gray background. Okay, cool. So really quick, when I click it, this is what it shows up, okay? You have your initial purchase amount. You're basically gonna put whatever your amount is, okay? Whatever you're starting with in your trade balance. Your daily interest rate in percentage, that's going to be your gain every single trade or every single trade session or day, whatever you want to allocate as the percentage gain. Let's just say per trade. Let's just say we're going to do 5% per trade, right? Term of days, we're going to say 40 days, 40 days and 40 nights. We're going to do 100% reinvest. Okay, include weekends. We will not, unless you want to trade crypto. Sure, go ahead. Right, and then so this again is $1,000 as our trade balance, 5% per trade. After 40 trades, or this is in days, but we can say 40 trades. What would this $1,000 look like? Again, this is granted that we won every trade, which is not ideal because we're not going to win every trade. But that $1,000 would turn into $7 grand after 40 trades on 5% gain. Okay, I just want to show you how powerful that is. All right, 5%. If you can do 5% a trade, is that hard? Technically, you can risk 2-3% per trade to make that 5. All right, look, all you're doing is making $50 a day, $60 a day, then $70 a day, $80 a day, $100 a day. Okay, and then by the 40th day, you're making $300 a day, and you're at a total of $7,000. Okay, that's only off 5%, y'all. All right, so I use this site again to help formulate my trade plan. So if this is what you need, because it's one of the first things that I did to really achieve my first 6 figures in trading was I created a trade plan and I followed it and I hit it. Literally. Like my first try. It was nuts. I did it by accident. I was like, well, I was blowing accounts. This was like, I don't know, 3 years ago. I was blowing accounts back to back every week. I'm like, damn, you know, I'm like, my analysis is on point. My trading's on point. I'm winning all my trades, but for some reason, I'm still blowing my accounts. And I'm like, what the hell's going on? The worst feeling you can have as a trader is you're accurate as hell, winning all your trades. Some of y'all are where exactly I was, where you can mark up a chart, know where the market's going to do, okay, but you're still blowing your accounts or still just losing money because you're not confident in your trades, right? You're over leveraging on the trades. You're not trading what you're supposed to be trading. All of these other different intangibles or you know, things in the market that's just jacking you up. Okay, so I was blowing my accounts and I was like, well, let me try this trade plan thing because I have nothing to lose. All right, it's like when you blow 15 accounts in like a month or two, you're pretty gassed out. You're like, bro, well, I might as well try to do it the right way, right? I was like, I have nothing to lose because I've been blowing accounts doing it my way. So let me try to do it the quote unquote right way to do it. And what happened is I understood what slow compounding can do for you. And that's when I literally turned like my first 4 figures to 6 figures in under 30 days, was when I literally and properly, I said properly, well, when I properly followed my trade plan. Y'all feel me? I'm trying to help somebody, man. I'm trying to help somebody. Someone here needs to go back, create a trade plan, and learn to follow that damn thing. Okay? Somebody here. Somebody. All right, y'all feel me? Okay. So, years in the trading game, what did you learn, Ryan? Just a few things, and then we're done. Now some Q&A, okay? Trading is not a sprint. It's a marathon. All right? The goal is to stay in the game. The goal is not to make a lot of money very quick. I mean, I've done that. You've done that. We've all done that. Our favorite trader has done that. My mom could, well, no, my mom can't do that. But a lot of people can do that, okay? It's not hard to make a little bit of money in the market. You know what's hard? Being profitable for 6 months. You know what's hard? Being profitable for a year. You know what's hard? Staying in the trade game for over 5, 6, 7 years. I've been trading for 7 years now, y'all. And there's a lot of people who are no longer in this game. Okay? They're no longer in this game. I'm talking 6-figure earners, 7-figure earners who are trading 3, 4, 5, 6 years, and they're no longer trading anymore because it's too stressful. They can't handle the ups and downs, and it's taxing as hell on your personal life, to say the least. Okay? So it's a sprint. Take your time. Okay? How you handle your highs will dictate how you handle your lows. Become unattached to the outcome. It's very hard, but extremely necessary. Okay? Not every pair is your pair to trade. I'll repeat that again. Not every pair is your pair to trade. Some pairs you got to leave for the other people. Okay? You know how not everyone's meant for you? You feel me? Like those people over there in the club in the corner, they're not for you. They're having fun over there in the club in the corner. Let them be great. Okay? Worry about you and your friends, at your little bar in your corner. Relax. Okay? Don't worry about them. They're having fun too, but y'all can have fun doing what y'all want to do. Some of y'all are worrying about other people in their little corner. Okay? You're worried about them trading US 30 and GBP, JPY and gold and AJ and AU, and that's not what you can trade. That's not what you're going to trade because of your schedule, because of your personality, because of how you like to trade, whether you're a scalper, a swing trader, intraday trader. You have to figure out what works for you and stick with it. There's some traders that I know trade GJ. I hate GJ. Okay? But I know traders who are successful with GJ. What are you talking about? So I can't sit here and say that you can't be successful trading GBP, JPY 24/7. You can if you study GJ like a bazillion times. Okay? Just study her, backtest her, all that, and you'll be fine. Okay? Stop listening to 100 different traders with 100 different styles, trying to fuse them all together and make them one Super Saiyan fusion Kamehameha strategy. It's not going to work. It's not going to work, okay? It's not going to work. Please stop. Please stop. What you can do, and what's more important, is find 1, maybe 2 or 3. I'm just being real with you. Maybe 2 or 3 people that you can count on, that you can rely on. Me being one, because I'm just being biased here. But anyway, you got to find 1 person that you can really rely on as a good foundation of trading. Maybe 2 or 3. All right. Understand their methods and just create your own. Right. Or take 1 or 2. And if hopefully they overlap each other and you can just trade have a good foundation to trade on, and then you can just add on what you want to add on from there. But you don't really want to go past learning from 4, 5, 6, 7, 8 different people. I promise you it's not gonna work. You can really look for one person, stick with that, right? Stick to maybe 2 people if their trade styles aren't too far apart from each other, maybe even 3, I believe. But when you start to touch 4, 5, 6 different mentors at once, and you haven't mastered one of the strategies, that's a problem, right? You want to master one strategy at a time. Okay, when I was studying market maker, I studied market maker. When I studied institutional trading, I studied institutional trading. When I started to create my own strategy, that's what I started to do. I wasn't studying all of them at the same time. Someone needs to hear that, okay? Because some of y'all are trying to learn 50 damn strategies at once, and it annoys me. Because no wonder you're not successful. No wonder you're not consistent. No wonder you're not making withdrawals. Okay, when I studied a system, you study that system for a period of time until you master, until you fully understand that system. Then you go on to the next thing. Okay, that's like you trying to be a martial artist and you're trying to learn Kung Fu, you're trying to learn Taekwondo, you're trying to learn Brazilian Jiu Jitsu all at the same time when you haven't mastered none of them. But you're trying to master all 3 of them? What in the fake MMA are you doing out here, bro? It's not gonna work. You gotta take one style and master it. Have one at least proficient before you start to move to the next. Okay? I'm trying to help y'all out, man. Someone's out here doing the wrong thing. All right. So again, stick to 1, 2, max maybe 3 people you can count on that can really teach you what's going on in these markets, and stick to them for a good amount of time before you start to add on or try to understand another different style or method. Okay. I'm not even saying my style is the only way to be successful, y'all. It's not. I'd be lying to you if I said, oh, you only got to study Ryan's method. No, I know other methods by a lot of my other homies who are traders who have different styles than me, and they're just as successful. Okay. But you have to stick with whatever style that is and rock with it for an extended amount of time. You feel me? All right. Market preparation. We're almost done, y'all. Then we're in the Q&A. Why is it so important? If you fail to plan to fail. Simple. Y'all know I love that saying. Can't stop saying it because, listen, it's the truth. Stop trying to trade strictly off of your phone. Another keynote. Some of y'all need this, man. You are not planning effectively if you're trading solely off your phone. And what I mean by that is you're basing your analysis off your phone. Now, if you did your analysis off your computer, your iPad, whatever, and then you're trading off your phone, cool. I do that all the time. But what I'm talking about is you haven't looked at the charts all week. You pop up a New York session at 8 o'clock. You don't even look at your phone, or I'm sorry, you don't even look at your laptop. You're like, oh, let me look at my phone real quick. Let me go on the 5-minute. Oh, Euro USD looks like a good buy. Let me just buy it. Wrong, wrong, wrong. You're doing this trading thing wrong. Okay? Because it's very easy to get jammed up looking at your itty bitty screen on your phone on the 5-minute, 10-minute, 15-minute, 30-minute, 1 hour time frame, and you haven't even done a full-blown analysis, right, on the higher time frames on your computer or a bigger screen so you can really evaluate what the market's going to do. All right. So I'm not saying that you can't even be successful, but I'm saying you're crippling yourself. Okay? You're hindering your own self-growth by not taking the time of day and doing it correctly, doing it from your laptop or your iPad or something, doing an actual real TDA overall analysis before you get in the market. Okay, we've all made that mistake, right? But it'll hinder you 10 times more than it'll help you by taking the cheap and easy way to make profits consistently in the markets. Again, that's just the easy way to make it. Pop up your phone, hit buy or sell. We've all done it. It's easy. Oh, cool. Let's hope we make money today. But it's not the most efficient. Okay, you're gonna realize your accuracy is gonna increase at least 10 to 20% just by taking out the time of looking at your computer or a bigger screen like an iPad or something. All right. So I'm just trying to give you quick little tips that will really improve your trading, y'all. All right. And these might seem insignificant. These might seem very small and minute, but I promise you, it's the small shit in trading that makes a difference. I promise you. It's not the big things. It's not the strategy. It's not Ryan giving you the crazy candlestick patterns. It's the small shit like this. I promise you. Okay. All right, I'm not even gonna go over that, but patience is the variable that separates the retail traders from the professionals. Seriously, that's it. Okay. It's one of those key things that you have to understand. So when you see me in the markets on my live sessions, right, and or on my signals, I'm like, hey guys, we're being patient, we're waiting, right? But there's a thin line between being really patient, or being patient in the market and knowing when that trade isn't going your way and getting out. It's a thin line, and you can only understand that by really understanding your pair. Okay. All right. So, revenge trading and why it will kill your trading. This is like one of the biggest pitfalls when it comes to trading. This can be avoided. All right. When you have daily, weekly, monthly goals already mapped out ahead of time. Again, the trade plan, all that type of stuff, guys. This is all, again, mastering yourself. Revenge. Can I stop you from revenge trading? No. Okay. Only you can. Only you can prevent forest fires. No, like only you can. You can prevent it, not me. All right. Hold on, y'all. Okay. So yeah, mastering the markets is not that hard. Mastering yourself is the hardest part. Okay. So most will not take the time to truly look at themselves in the mirror and understand that this is where the money is made. This is like that last hurdle when you are really proficient in the market. When you're advanced, so I'm speaking to all my advanced folks here, right? I'm talking about guys who've been in the market for maybe 2, 3, 4+ years, or maybe even people who've been in the market for a year and a half or more, but you have a very proficient level of mastery under your belt. You really understand what the markets do. You really understand your pair, right? You really understand the manipulation that Forex has overall, and you're able to anticipate it for the most part. The last hurdle, the biggest hurdle that you're going to have to jump as a trader is mastering yourself, mastering all these intangible things. And this is by far the hardest thing to do. Okay. But you have to realize nothing is going to stop you at this point. All right. Besides you. That's it. Once you have all the knowledge, it's only you stopping you. All right. And you have to realize that. You have to be cognizant of it. And you just have to start working on it or get around yourself, get around a team that can help you. Okay. So the last quick little notes, and then I'm done. STM, stick to your pairs. The biggest misconceptions that you must trade 10 or more pairs to become successful in this industry. That's trash, right? Or that you need 100 pips a day. That's trash. We debunk that every single day. You know, we can grab 10, 20, 30 pips a day, and I can make more in 10, 20 pips than some people with 100 pips a day because I know how to scale in on a good trade. I can turn 10 pips into 50, 60 pips easily. You guys and all my students will vouch for it. Okay. Stick to your pairs. Again, y'all see me trade the same pairs over and over again. If you see my free signals or you see or you're with me as a student, then you know, like, I stick to the same pairs. I don't deviate. Sometimes I may play around with gold. Sometimes I might play around with pairs I shouldn't be touching, you know. But for the most part, 80% of my trades are pairs that I've been trading for years. I stick to my AU, stick to my EU, stick to my AJ, stick to my EA, my GA. I picked up NAS 100 along the way last year. She's consistent. I love her. She's bae, low key. You know, she cooks me breakfast in the morning. I like her. Okay. She treats me nice. But I stick to like the same group of pairs. That's it. Because I've studied those pairs for years. Why would I change up now? I'm a loyal man. I'm a loyal, light-skinned man. you know? Of course. Anyway, y'all. The last part is trust your analysis and take the trade. Right. So this is the last slide. All right. Trust your analysis. When you don't trust your analysis, you're not prepared enough. Become unemotional from the outcome. Don't even worry about the trade if you don't have the proper risk set. Okay, you will only worry about a trade that you do not have a proper stop loss or when you're over leveraging. That's the only time you're really going to worry about the trade. So you have to take your time in your trades. And the little saying that I like to live by is the patience pays and rushing delays. So when you rush your trades, that's when you start to get jammed up and mess up. You will always make more money being patient than you will rushing. So when you see a move and it's like, oh my God, it's dropping, I gotta sell. No. That's when you don't want to sell. Or when you see the move going up, oh, it's breaking up. Oh, I'm gonna miss it. No. Slow down, young man. You can relax. It'll pull back. Relax. Okay. Be a little patient. And I promise you, it will save you 9 times out of 10. Right? So you guys see that all the time. I'm just extremely patient in the market. Sometimes I'm overly patient, but that's going to save your account. Right? It's all about account preparation, right? And preservation, I should say, account preservation. Okay. Woo, yo, I'm like sweating, yo. This is like a whole hour and a half. Okay, I'm done. All right. I'm done. All right. I'm gonna close it and then we're gonna do some Q&A. Hopefully y'all got some value. All right. Catch you guys on the next one.